Such a rebel. Okay, welcome to the weekly roundup, July 8th, 2022. And a weird July 8th it is, Ben.
It is
Okay.
indeed. Yeah.
I'm in my downtown studio here, and Ben's being held hostage in Stittsville somewhere. But his background, and neither of us have, both of us are on the Rogers Network, don't have any phone, don't have any internet, so we had to escape to the branches. Yeah, but hey, the trusty old National Bank came through for us.
It really did.
Secure networks.
It did.
Yeah.
Safe and secure networks.
Yep.
It's just a
Should
small
be the new
note.
tagline.
CIBC was on Rogers. There's no trading there today.
No trading at CIBC. So nothing else. Good mood for that.
Yep.
Okay. All right. So obviously nothing happened. Not much happened today. What else happened in this weird week in the news?
Yeah, obviously we saw last night Shinzo Abe was assassinated, which is wild. So hard to get a gun into Japan. Seems weird. I mean, just like this, these weird events are popping up everywhere. It's very fourth turning-esque. You get these kind of crises in these types of environments.
Yeah, no kidding. Yeah. Oh, somebody has a Q&A there. Lyle's in the chalet.
Okay.
He's got the bell in the chalet.
Okay.
Yeah, so that was yesterday. What else this week? The market's still a little choppy there.
Churning.
A little red.
Yeah, today, and no joke, all joking aside, because all the networks were under pressure, the trading activity was a lot lower in Canada today. You know, where CIBC usually accounts for 30 to 40% of daily volumes. They're because their network was not set up for it. Trading was very low, so TSX finished down a little bit. Most markets were pretty flat throughout the day, and volumes in general were pretty flat throughout the day here.
Okay. Yeah. All right. So what? So as far as that's concerned, what'd you get up to in the portfolios then this week?
Yeah, so I guess the one only thing of note today would have been the jobs numbers in the U.S. was a little bit better than expected, so bonds corrected a little bit into that. And for the portfolios, yeah, still really spending time and looking at companies that I think are going to do well coming out of this, because we had a call this week with our chief investment officer. So he sits on the investment committee of National Bank and helps run and direct all the positioning for the bank, and had a really interesting discussion around what and how he thinks things are going. And the one note that I took out of it was there were questions about, is this 2000, 2001? Like, is this a tech wreck that's going to last a decade? And he seemed to indicate that he didn't think so. He said, these are a lot different businesses then. You can't compare Shopify to Nortel. It's like, Shopify was an overvalued company, but still growing and is playing a material part in the kind of the new digital finance world. And, they're not doing illegal accounting practices like Nortel did. So these are, much different businesses. This tech correction is much different than 2000, 2001. I would tend to agree with that as well. Yes, there'll be ones that die, and I think they're going to be more like the coins, like the crypto coins are the ones that die.
Yeah.
And I think the wreck is in that area, not in the established companies. So that's again where I'd look at where we'd bought earlier, Block and ArcF and PayPal and Square, and some of these businesses that I think, over the next multi-years have the potential to go up 100, 200%. And so that was interesting to hear an agreement from our CIO on that as well.
Yeah. And worth noting, because we haven't talked about it that much lately. Well, except for the downside, I guess.
Mhm.
Bitcoin with the biggest rebound in a while.
Yep.
It's a bit of a comeback here.
Mhm. Yeah, so I think some of that's getting cleaned out of the system here, where a lot of these businesses that couldn't survive, like the Luna and Celsius, and some of these, they're trying to build these leverage platforms. And as liquidity comes out of the system, that's where you get kind of the shocks into the system that where they're over levered, where you haven't seen anything concerns with Coinbase or Binance yet. Like these are the big exchanges where a lot of the transactions happen. But yeah, you're seeing the smaller players get kind of pushed out to the side.
Yeah, for sure.
Yeah.
All right. Did you arrange any charts for us today?
Of course.
Doesn't matter what's going on in the world.
You gotta have the
And we'll
chart.
have some interesting charts for us.
So it was Q3 update from Hedgeye. So this week as well. So that was a big kind of news flow data look at this week. So I shaved it down to 5 slides, with 4 of them being informational slides. So yeah, let me pop that up there, and then we can go through that.
Okay.
All right. So just let me. Give me 1 second. All right. Let me know if you see it.
I do.
Do? Okay.
Yep.
Yeah. So this is obviously we look at this quite frequently, but this is the quarterly update, and we don't need to delve into each individual pieces of those line items, but the 2 major inputs are growth and inflation. Down the middle here is growth, inflation. These are the kind of the global countries that represent most of where the attention goes from an economic perspective. And the red dots would be kind of that deceleration, quad 4, slowing growth, slowing inflation. But I think one of the more important things that I've looked at over the years is understanding, like, what do they mean though, and how strong are they from a signal strength perspective. And so as we look down here, and I think probably fast forward to the bottom of the line as I look at it here, this is Q2 and Q3 of this year. We got a 92% signal strength that we're going into growth and inflation decelerating. And then as both of them are in the kind of the mid 90s. So that I think was an interesting one.
Yeah, for sure.
Yeah.
Good one.
I think Lyle put his hand up there.
No, did he? Let's see.
Yeah. Yeah.
No, I think that was from before.
Okay, perfect.
Yeah, I'll get rid of it here.
Yep. And so then as we look at a couple of other contributors, obviously I think everybody kind of generally agrees that we're getting growth decelerating. The thing that everyone doesn't agree with is that inflation is going to decelerate. And so I think this was an interesting piece to look at, because shipping supply chain's been a big focus, and this kind of I think short-term thinking that energy prices and shipping prices are up here and here to stay. But this is a reasonable forecast to show what this is going to mean. Interesting to look at it. Expected shipping to contribute to a 1.8% decline in core inflation. So that's a major contributor to the inflation perspective right now. So I thought that was a cool way to look at it.
Yeah, it is interesting.
Yeah. 2 more quick ones, and then just a quick summary slide there. So, as I've talked the last little while, we bought KWeb exposure to Chinese internet companies in some portfolios. This is just a quick view at China. As I mentioned, China's already gone through a lot of this sell-off, and now we're starting to see it reaccelerate again. And part of that is the fact they're easing monetary policy again. So you're getting a pickup in money in the system. So you're getting a pickup in asset prices, where ECB and of course the US and Canada would be going the opposite direction right now. So this is M2 seems to be a major contributor to what happens to asset prices.
Right.
Last one is just more of the kind of the general fallacy around, like, people have a lot of money still sloshing around the system, and this is a US showing that it's not actually true. This is the bottom quintile. It shows that basically all that excess savings doesn't actually exist, and people don't have the money to handle higher interest rates and also higher consumer prices.
Quintile.
That's
a first on the roundup.
And the last one coming up here. So this is one I thought we would just pop up. It's I think it's just it's a reminder that, these, where we talk about the investment piece quite a bit, and it's important and super important to us, and we pay attention to it. Some of the things that we do as well are more along the lines of that we can do all of these different tools and pieces to plan for you. We've been in conversation with a client that they've been helping transition some of the money from parents to kids to grandkids. We've met with them and the lawyer a couple of times, providing some advice because they do have some needs to have a national trust involved. We spend the time from kind of start to finish to get to that will and estate plans in place. And we don't talk about that stuff very often, but this is really the full picture of what we can offer. And if there are questions that we can answer or help with, then certainly please let us know.
Yep, definitely. That's a good one.
Yeah,
I think most people don't realize that we do this many things, right?
It's true. Yeah,
or have the opportunity to. Yeah. Okay, well, let's oops,
I just took it off there. Yep.
So what are we seeing from for next week?
Well, we got Bank of Canada meeting next week on 13th, so on Wednesday. So presently right now that we're expecting an increase of somewhere between 50 and 75 basis points. One of the interesting things that I've seen in here, where I'm actually in the branch, I've been talking with some of the bankers. Some of the banks are tightening up on their lending practices, and National Bank has gone to change the rules where you can't port mortgages anymore. So it's a temporary, I understand, but you're seeing those conditions further tightening up. So I have a high conviction that next week is probably the last rate increase in Canada. But we'll be interested to interpret what they say. Have they changed anything? So most of that, my attention will be around what they're saying, what kind of the forward guidance looks like there.
Yeah. So what will that look like then? You think it'll be the last rate increase and then just hold for quite some time, or?
Yeah, so I would expect they hold. I think I don't know if I mentioned last week or not, but historically, kind of that average time between last hike to first cut is typically been around 8 months. So yeah, I'd expect probably hold with maybe some softening terms around their quantitative tightening. So how much they're buying, what they're buying, what they're rolling off their balance sheet. I think some of the terminology is going to change around that before we go to the cut, because the cut will be as a result of that employment number slowing very quickly, and that inflation number also slowing very quickly. So that, because the economy is such a giant thing to move, will be a little bit slower. But I'd expect more what they say is going to change. But that first cut probably is next year, first quarter.
Gotcha.
Of next year. Yeah.
Gotcha.
Yep.
Okay. What else? What else do you want to say?
Another thing of note that I saw this week is CalPERS, which is one of the world's largest pension funds. They sold down a $6 billion private equity tranche at a discount. So it might seem like a ridiculous, tiny, small thing in the big picture. It's a sign that some of these big institutions need capital, and they're
Right.
just liquidating whatever they can at whatever price they can to free up some capital in case they need it for other things. And so private equity and private debt have been such a huge growth engine for asset managers the last couple of years. Now we're starting to see the other side of that.
Yeah.
And at the same time, internally here, we had kind of an adjustment to the size of allocation you could have in private credit. And
Right.
so it went from kind of 10% down to a much smaller number. So that private equity, private credit market's really tightening up. And it's a sign that like these are some risks that we need to pay attention to. So I'd say those are the things of note that I saw this week that I'm watching.
Okay. Great. All right. Well, I guess that's it. That's the end of a kind of a weird week for sure.
Yes, indeed.
Hopefully we get our network back and we're back to normal on Monday.
I hope so.
All right, everybody, have a good weekend and we'll see you next week.
Thanks. Take care.